The biggest drawback to most traders is not being able to get out of a losing trade or not being able to get into potentially a winning trade, all because of fear and doubt. Trading psychology, primarily fear and greed and some doubt, is the biggest reason why most traders fail. Do you want to know the shocking truth about trading psychology? Most traders think that they lose money because they don't understand the market, or they're inexperienced, or they have the wrong indicator, or their risk management techniques aren't correct, and all sorts of things. Some people just think they're not good enough, they're not clever enough, not smart enough to trade. Well, the truth is, most of those reasons are not the main reasons traders fail. The main reason traders fail generally is because of their own trading psychology, what's going on inside their heads. Think back for a moment. How many times have you taken a trade only to let it run into a bigger loss than you hoped for because you just didn't want to take the loss? Or what about an occasion where you knew that the market had broken support or structure and you were buying and you added more to a losing trade, just hoping that it would turn around at the right time? How many times have you not got into a trade because you thought maybe the setup wasn't right, or if you were wrong perhaps, and the market went against you, that you stood to lose a lot of money? It's interesting that mentally, when you look at a potential trade and you consider the possibility of getting it wrong, your mind doesn't immediately go to setting a stop loss or a hedge level, but your mind is probably going to, where can I add the next trade? What happens if it drops even further and I have to add more and it goes even lower? What happens to my position? Will I blow my account? Those are all, of course, the wrong sorts of questions. The right sort of question is, if it goes below that level, what am I going to do? Am I going to hedge my position? Am I going to take a stop loss? What am I going to do if it goes against me? The biggest drawback to most traders is not being able to get out of a losing trade or not being able to get into potentially a winning trade, all because of fear and doubt. Trading psychology, primarily fear and greed and some doubt, is the biggest reason why most traders fail. So how do we overcome this? Well, first of all, you have to realize that when you get into a trade, there's a pretty good chance that you won't succeed. For example, I win about 70% of my trades, I lose about 30. That means every 100 trades I take, I lose 30. It also means every 10 trades I take, I could lose 3. And I might even lose more than 3 in a row. The question is, how am I going to deal with that psychologically and also technically on my own charts? So here's a very simple approach to managing your trading psychology. When you get into a trade, don't get in with fear or doubt or greed. Eliminate those emotions. Secondly, have a line in the sand where you know that if the price reaches there, you'll be wrong on your trade and you have to take action, no matter what. And that action could involve taking a stop loss or hedging your position or adjusting your position or hedging it with something else. Once you've determined your trading direction, your line in the sand where you know you'll be wrong, and the action that you'll take when you are wrong, it's much easier then to manage your trade accurately and also then to manage your emotions properly. I guarantee it. If you look back at your last 10 disastrous trades, probably all 10 of them will be because of your mental approach to the game and not because of your trading strategies. I'll finish with this. There's a very good song by Ed Seykota and the Trading Tribe which talks about risk management and sleeping well at night. One of the lines in the song is, how do you know when your risk is right? You make a lot of money and you sleep at night, and if you can manage to do that, you're on the right track. Take care.
Hola Prime. Trade with transparency.